Testing 1, 2, 3. Good morning, everybody, and welcome back to Crypto Warehouse. There we go. Just checking it. For some reason, the microphone seems to have reset on all of my scenes. So I recorded 2 videos this morning in complete silence. I've had to record them just before going live. So I don't know why that's happened, but it also has happened on the live stream. But we're back. So it's 11 o'clock, 11 a.m., 11th of April. We are back with another show, another interesting show today. Good morning to Hidden Agendas, Mags, Tariq, and Gianni. I hope you're all doing well. I have paused the chat on one of our streams simply because it gets abused by spammers, so that's been turned off. Good morning to Danny. I hope you are well. Good morning, Bar. I hope you are well as well. Please speak not too fast. I will try and slow down just for you today. Now, we're going to have a busy show today because there's a lot to get through. We're going to look at the inflation news that came out last night that caused all kinds of consternation in the markets. Everything went pear-shaped, and look where we are again today. We're going to go through that. We're going to have a look at Deutsche Bank. We're going to have a look at what Hester Peirce has had to say. ETH, oh no, this is to do with Athena. We're going to look at Ondo. Ondo, I've mentioned a couple of times. I'm going to show you what the project is, and there's a Ondo and Flux intertwined. We're going to go through that as well. So it's an interesting show as always. We are here to educate. None of this is financial advice. Bottom right hand corner, we are aiming for 74,000. Don't worry, Bar, I don't normally go too quickly. It's normally at the beginning. Yeah, as Tariq says, if you think I speak quickly, you should listen to Brogan, the other half of Crypto Warehouse. He speaks at 10,000 miles an hour. Bottom left-hand corner, we are at 118,000 followers. It's going up every day, thankfully, going up every day. The target by the end of the year is 200,000. We can get there, but only if you new people that have come to see us give us a follow. We stream every day, Monday to Saturday at 11 a.m. We stream sometimes on Monday and Wednesday nights with a kind of trading show that Brogan runs. Nothing to do with me. Good morning, Fran. I hope you are doing well. I hope you've got yourself a nice cup of coffee. Right then, let's go through and start the show. Have a quick look at the markets. Where are we? We are coming in at, if I scroll down a wee touch, 70,900. We are up almost 3%. Ethereum is coming in at $3,600. The total market cap is 2.65 trillion. I remember the days. Back in the day, last year, we were under $1 trillion. We've come a long way. Volume is under 100 billion. Bitcoin dominance is moving up. ETH dominance hasn't moved. Now, a quick thing about Bitcoin dominance. This is likely to go up more and more over the next few months. 53, 54, maybe 56%. Expect Bitcoin dominance to start to dominate as we go through the bull run. One thing to point out to Solo Sky. Solo Sky asked me to review a project today. I have done, and I have made the video. I've had to record it twice because the first time the audio didn't work. The second time I've recorded it. I have 2 videos to go up today. One about this scam project and what to avoid with scams. The second video I have made is about next week's Jupiter LFG vote. Starts next Wednesday. All the details of all the projects are going to be in the video. So 2 videos today. Haven't made too many videos this week because, what day is it today? Thursday. Brogan had his birthday, so we were celebrating. So I've not had a chance to make too many videos this week, but I am going to get to it. So then, 24 hours. What's happening? Jasmy Coin is up 25%. Pendle 18%. Neo 14, Helium 12.5, Audi is up 11, Theta is up 9. Some good movers today. What's losing. Uniswap is down. Uniswap is down. I'm going to cover that in the X-Files in a second and explain why it is down and why it might not be a bad price to get into Uniswap at, to be honest. Nervos is down. Wormhole is down a touch. Not too many losers today. Not too many losers. So that's pretty much it from the market. Let's get on with some X-Files. Now, as always, we start the X-Files with some light-hearted humor. Because why not? Crypto is stressful as it is. We all need to keep our hair. Now then, for those of you that didn't know, this rabbit signifies you, and that water signifies crypto. You do not know how capable you are until you take the plunge. Crypto is 2,500, 3,500, 4,500 assets. Nobody, including myself or any other crypto streamer, knows everything about every project. There was a very wise saying, I think it was Socrates or Plato, who said, "Wisest is he who knows he does not know." You don't know how far you've come in crypto until you look back and see the shore. And this signifies, I'm aiming this really at people like Mags and Fran who think they don't know anything about crypto. In the first 3 or 4 months of being in crypto, you learn 60% of everything you need to learn. You learn what Bitcoin is, proof of work, proof of stake, things like that. And suddenly you look back at your friends who don't know anything about crypto and they're on the shore because they've not taken the leap. It's your job to show them that they can swim. And it's your job to teach them how to swim and what to avoid. So don't beat yourself up that you don't know anything about crypto because you know more than 90% of the population. So that's the first one of the day. Next one then, and this, why am I surprised, or why am I not surprised, should I say? BlackRock, JP Morgan were given the CPI data before anybody else. This allows JP Morgan and BlackRock to trade and to sell the assets that were more than likely going to drop yesterday. They've broken the law. Do they care? No, because the amount of profit they have made from yesterday will exceed any loss that they will have to pay in fines. It's how it works. When you see American politicians calling other countries corrupt, you know, whether it be calling out somewhere in Eastern Europe, whether it be calling out somewhere in the Middle East or Africa, they call people corrupt. They're the biggest hypocrites in the world. They are the most corrupt group of people in the world. They want to own everything. Not Americans in general. I mean specifically people like Jamie Dimon, people like Larry Fink. Yes, BlackRock is great for Bitcoin and great for crypto, but they only want to own it. So it's a little bit like inviting a tiger into your house. It's all well and good until the tiger gets hungry and wants to eat you. So this is disgraceful. They'll be fined a few $100 million. They won't care because they'll have made $3 or $4 billion yesterday and they'll move on. They pay more fines than anybody else. They don't care. They make 10 times what they pay in fines. Next, again, this is really connected to what I've just said. If you allow the government to break the law for an emergency, they will create emergencies to break the law. This applies to financial institutions as well. If we allow companies to have insider trading and allow them to see what's happening before anybody else, and we don't give them a slap on the wrist, they're going to find ways to get more and more information before the markets, and you have no chance of trading against BlackRock. You have no chance of trading against Fidelity. What you want to do, you'll hear people talking about swimming with the whales, and what they mean is, what whales do, you should follow. And that very simply, that's how how it has to be, unfortunately. Now, another crypto company said it's ready to fight the SEC after receiving a Wells notice. In America, the SEC issues a Wells notice normally before it tries to sue a company. This time it's Uniswap, which is the largest decentralized exchange in the world. They're being sued by the SEC, or they will be sued by the SEC. As I was trying to say yesterday in another meeting, Bitcoin cannot be sued because Bitcoin doesn't have a centralized head of state, if you like. Ethereum has the Ethereum Foundation, and it has Vitalik. So if the SEC is going to go after somebody, it's going to go after companies that it can easily get hold of, such as Ethereum. Now, I'm not sure how they're going to go about suing Uniswap, because Uniswap has a central administration unit, but it doesn't own the platform. So they're going to sue, and they're going to lose. Uniswap is going to win. It's as simple as that. I am not surprised, just annoyed, disappointed, and ready to fight. So let's see what happens with this, but the SEC aren't going to give up. They are all over this, and I think this is the actual announcement itself. Let's just double check. Today, Uniswap Labs received a Wells notice from the SEC, and we're ready to fight. This is the latest political effort to target even the best actors in crypto, like Uniswap. All Uniswap products and Uniswap protocols are unaffected. Again, it's the SEC going after what it considers to be the lowest hanging fruit. We all know that the SEC is going to lose in a court of law because Uniswap hasn't done anything wrong. The same way that you can go after Bitcoin hasn't done anything wrong. There are bad actors. Why are they going after Uniswap? Why are they going after potentially Ethereum when they should have been stopping people from being burned by FTX or Celsius or BlockFi? Those are the people that the SEC's role is to protect you, the individual. It's to protect your assets. It didn't protect your assets on every single collapsed company that has gone in the last 2 or 3 years. Uniswap has survived. Ethereum has survived. XRP has survived. The exchanges that are being sued by the SEC have survived. So why are they going after them? They haven't broken any laws. You can't break a law that doesn't exist. And why does the law not exist? Because the SEC hasn't created it. It's created a black hole, and we're going to talk about it in a little bit when we talk about Hester Pierce. The SEC doesn't want regulations put in place because then it can't sue whoever it wants to sue. Why has it gone after Uniswap and not gone after any other decentralized exchange? Because it's gone after the biggest and lowest hanging fruit. It is an absolute disgrace, and Gary Gensler should hang his head in shame. But he won't, because he won't be there in a year's time, because Biden is more than likely going to lose the election. We're going to have a new head of the SEC. So he's on borrowed time. He knows it. He doesn't care. Bitcoin sank below $68,000 following the US inflation data release. Why does it matter? Because if inflation is high, interest rates will remain high. Only when inflation comes down will interest rates come down. And we spoke a few days ago about the chances of the first rate cut being in June being 50-50. It is now looking likely that that's going to be September. So the chances of rate cuts this year are dropping. We were looking at 3 rate cuts this year. We might not be. But the issue is that it's a balancing act. Unemployment is going up in America. That puts a drain on resources, and people pay less tax if they're unemployed. There is a balancing act between high interest rates and the economy stalling and going into recession. And Powell is in trouble because inflation isn't coming down to where he wants to, but the longer he keeps these rates high, the more damage he's doing to the economy. Companies will not survive the next 6 months. If we're looking at September, which is 9 months away, 8 months away, whatever it might be, they're going to struggle. And that's the problem for him. So we bounced off 67,500. It was only a touch higher. I think it was 0.1% higher than expected. So we came down below 68,000. It was a bit of a wick down. I thought we were going to be struggling. I said to you on Monday or Tuesday, if we cannot get above 69,500 and stay there, then by the halving, if we're still at that figure, then I'm going to be worried about just how high Bitcoin can go, because we've stalled for the last 2 weeks now. Now we're at 71,000 today. My target is still 74,000. We could be at 74,000 today. We could be at 74,000 by next Wednesday. That's where we need to be now. We've had a leg up, but I think we've got the Bitcoin chart to look at. We need to start moving now. We've had a break. We've had a good break. We've had a bit of bad news from the markets. The macro environmental news came in. It wasn't so great. We've had that. We now need to move on. We've even had Peter Schiff throw in as much mud as he can at Bitcoin, and it hasn't stuck. So we're back at 71,000. I am slightly surprised with that high, but it's all good. I think potentially we've had a short squeeze. That information hasn't come out yet. So the CPI is higher than expected. And I'm not too worried about that. I don't want to spend too long on it. Let's have a look and see if we've got the Bitcoin chart. I think we do. I think we do have this, the Bitcoin chart. Yes, it is. Okay, so remember, we always say to zoom out. And if you zoom out, look at where we've come from. This is the daily chart, by the way. So this is going back. And look where we've come. In that period of time, we've come up an awfully long way, sitting at just under $71,000, and we are in this little range. There is my target, almost 75,000. Bitcoin has had a few wicks down. It came down to here, which was 64.5. We've rebounded quite well. We wicked down there to 67 and change. So we're in a good position. But if you look, since we hit this top almost a month ago, 13th of March, what are we, 11th of April today? So we're in the last month, we haven't really broken out of this range. And you could probably redo this chart a little bit just to make it a bit clearer on where we are. We're kind of in that range. Now, we're kind of doing this. Now, what we need to do is we need to break this range. We need to get above where we are. And the problem is the data that's coming out isn't substantiating a move up. You know, we're looking at a weaker economy. We're looking potentially at recession in America. And there's not a lot happening. And no matter how you look at this chart, people are saying, you know, we've got bull pennants here and there. And yes, potentially we have. We go down to the lower time frames. The RSI is looking good. You know, we're not overly bought too much. The weekly, I think we're still overbought, but the weekly is coming down. So this is starting to arc down now. Maybe we do this over the next few days, but I'm not sure we're going to be in the 80,000 range by the halving. We are 9 days away now. I think the best we can look at is about 75,000. If we get to 75,000, then we could have a 3x, 4x from there over the course of the next 18 months. But we really need to get our bum in gear, really, to move on from where we are. We can't be hanging around here. We have stalled. If you look at the chart on the 4-hourly, really going back to the 4th of March, 5 weeks we've been in this range now, and we really need to break it, and we need to break it to the upside. We've had You know, we had an attempted breakout here. We broke down below here, but nothing really, you know, we've been in this range since, or we broke back up into this range on the 24th. We couldn't break up. We found support. We've tried to break up. If we have another run at it today and we break it, then yes, we could go higher, or we're just going to stay in this range. But we need to move, in my opinion, we need to move a little bit higher than where we are. And, you know, maybe there's some good news on the horizon, who knows, but we do need to shift. You know, we've had a break. We've had a good break. Now we need to move up. Now then, let's move on. Let's have a look at some news. And it isn't all doom and gloom, by the way. We're above all-time highs. We're a good $1,500 above our previous all-time high. It's not as if we're in the doldrums and we're sitting at $50,000. I saw yesterday there was a couple of, when we were going through the dip, there was a couple of crypto influencers telling you to take profits now. Now, I'm very reticent to give you advice about taking profits at this stage of the market, because we don't know where it's going to go. If you're in a meme coin or a low cap gem that's made you 500% fine. If you're in Bitcoin, I'm not taking any profits out of Bitcoin right now, even if we go down to 50,000, 55,000. So, yeah, I like your idea about making a show about exit take profit strategy. Right, okay, I would like to make a decent exit strategy for the end of the bull run, take a profit, but not to overkill it and ruin my portfolio. That's the balance you have to take. I totally agree. I think the best way to look at it is we'll make a show and we'll give you some ideas on dates of when the bull run could potentially come to an end, and base it on the date first and then the prices second, because the prices could change. We could have a flat bull run, we could have a big bull run, but we will make a show about it. Now, Deutsche Bank says consumers are more positive on crypto. A new study by the bank shows that consumers are warming to crypto, with 40% expecting Bitcoin to thrive. I wonder if these are Germans that have carried out this quiz. They've become more positive on crypto in Q1 2024, according to a recent survey from German investment bank Deutsche Bank. Get rid of these adverts. During this period, spot Bitcoin ETFs were approved and the general market was trending upwards. This has resulted in 40% of respondents expecting Bitcoin to thrive in the coming years and less than 1% thinking it's a fad. Now that really, for me, is the key phrase there. I'm not so interested about the 40% of people thinking it's going to rise. We're trying to shed the stigma of crypto being a fad and only used by criminals. When the internet started, I'm not going to go on about it again, when the internet started, the same thing came out. The internet is used by criminals, it's full of scammers, and it's a fad. That was the words slung at the internet. It took forever, we're talking 6-7 years, for the stigma to be removed. And the stigma stayed longer the older the individual was. So kids, you know, people under 25, they took the internet on and didn't really worry too much about the stigma attached to it. Anyone in their 40s or 50s, at the time you were saying to them, do you want to go and buy your car insurance online? It's a lot cheaper. They were saying, well, it's a scam. I'm going to lose my credit card details. I'm going to get drained, whatever it might be. So this indication that people are thinking it's less of a scam, less of a fad, that's what's key to me, because that then allows for adoption. On the flip side, 50% of people expect another collapse by 2026, and 38% believe Bitcoin will disappear in the coming years. That's not good news. This comes after the extremely public collapse of Terra, as well as the implosion of crypto exchange FTX. Now, the question I've got to ask this individual writing this article is If these are general banking customers, how would they know about the Terra collapse? Because that wasn't widespread knowledge outside of crypto. FTX was. So what I think this person has done, which is Ryan Gladwell, I think he's just thrown in some extra FUD into the article. I don't think people have ever heard of Terra, to be perfectly honest with you. Despite Bitcoin recently hitting all-time high, 1/3 of clients surveyed by the bank believe that Bitcoin's price will be below $20,000 by the end of the year. People have no idea, do they? While 10% expect Bitcoin to exceed 75 in the same time frame. A large part of the securities. Do we need to read any more of this? No, we do not. What I would say about this is, what's key out of this article is what people's opinions are of crypto, and that is whether it's a fad or whether it is used by criminal organizations. That's what's key. Everything beneath it, I think, is hyperbole and it's nonsense. We all know it will be very difficult for Bitcoin to go below $20,000 in a bull run after the halving with the ETFs buying all the Bitcoin. So I'm not overly concerned by that element, and I think that the author has just decided to throw in some FUD. Like, why didn't you mention BlockFi? Why hasn't you mentioned Celsius? Who knows? So anyway, it's good news, more good news, and that's the opinion of Bitcoin is changing. Now, one thing, having the residential and retail, should I say, opinion of Bitcoin changing, but we need governments and government agencies to change their opinion as well. And one of the people, the shining light, I think she's called the mother of crypto. I think that's a nickname. This is Hester Peirce. She, believe it or not, works at the SEC. What are we waiting for? SEC Commissioner Hester Peirce discusses moving crypto regulation forward. Known for her fiery dissenting opinions, Crypto Mom discusses how the SEC operates, why she wants to see crypto thrive, and her safe harbor proposal to allow projects to decentralize. Now, if I was a betting man, and I am not, I would put money on Hester Peirce having some potential future leadership role within the SEC. That's because I think she speaks common sense. And don't expect her to be a cakewalk. She's going to be as fierce as anybody, but we don't care about how fierce people are, we care about how fair people are. And at this moment in time, under Gary Gensler, there is no fairness in crypto. It is not fair. It is not a level playing field, and crypto companies are being penalized for trying to become regulated. I could reel off a list of companies that have won in court against the SEC. But the SEC just continues to sue people left, right, and centre. It's an utter disgrace. So Hester Peirce is trying to push forward regulation. Now, I'm just going to go and try and log back into chat because it kicked me out very briefly. So the SEC is not a monolithic institution. Look no further than Hester Peirce, who is currently serving her second term as one of 5 overseeing commissioners. Over the past several years, she has made a reputation as a defender of cryptocurrencies and blockchain tech, writing innumerable dissenting opinions regarding the many legal actions the SEC has waged against crypto. It's a fundamental American principle that people are free to make choices. The government is not there to protect people from their own choices. Now, we said this yesterday about Bitcoin, and American institutions are afraid of Bitcoin because they cannot control it. America used to be the land of the free. It is now the land of the controlled. And anyone that wants to argue that point with me can simply go and look at what Biden has done in the last 3 years, because there is not a single thing he has done to set people free. He has simply tied people up in knots. And the SEC is a reflection of the government in power in America. The SEC is not an independent organization. It is controlled by the government in America. The Fed is independent, but the SEC's head is appointed by Joe Biden. Joe Biden appointed Gary Gensler. There is a direct connection. So what Biden wants, Gensler provides. Pierce told CoinDesk in an interview, this view colours Pierce's opinions on whether the SEC should block the spot ETH ETF, which I don't think is going to happen. And let's have a look. So we're not going to go through the entire interview. It's too much. What are your fundamental political or philosophical differences? In terms of philosophy, I have the view that I don't necessarily know what's best for other people. We have our own statutory mandates that we have to implement, but within those mandates, we're often given discretion. And if we have discretion, my preference is to say, well, let's let market participants make a decision about what they want to do. Sometimes there's a reason we have to step into the middle of a transaction and say, no, you can't do that. Or yes, you can do it, but we better have a really good reason for stepping into the middle of their transactions. That's all we need to know about her. She knows what she's talking about. At the end of the day, she's clever enough, and I am all for her replacing Gary Gensler. And the reason is that, as I've just said, we need her to be fair. Now, that doesn't mean every crypto project that goes to America can set up and claim to be a decentralized organization and get away with blue murder. No. What we want is the SEC to say, here are the guidelines. Come into our office, sit down, follow these rules, and we're all good. The same way that banks, financial institutions, stock exchanges, other ETFs, they all have to follow the same rules. That's all we want. We don't want special treatment. We are not special little snowflakes. We want equal treatment. And the problem is that the SEC punish crypto companies, and crypto companies complain that they're being punished. And other market commentators turn around and say, well, you shouldn't get special treatment just because you're a crypto company. And that's the problem we're in. We have companies trying to be legitimate, the SEC saying, no, we're going to fine you. These companies complaining, and then the market telling them, you should just abide by the rules. But it's a circular argument because there are no rules to abide by because the SEC won't provide them. You can't abide by a set of rules that don't exist. The SEC don't want to produce those rules. It's a circular argument. I must have said this 20 times, I know. But I just want a set of rules. You go to any other crypto state, crypto country, they'll say, here are the rules. Follow these rules. KYC, AML, audits, spot checks, quarterly reviews. Check, 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 check. You are a regulated entity in my country. That's all that these people want in America. They're just making life so hard. And that has to be put at the foot of Joe Biden and nobody else. So if we want a fair crypto market, then we need another president who is fairer. That's all we want, fairness. Now then, I think I brought this up a few weeks ago. I need to reiterate this point again because I have a funny feeling that this is going to be the downfall of the next bear market. And I think that this is going to be Luna 2.0 in terms of what's going to happen. Ethena, we covered this. I've made videos about them. I said at the time that I wasn't going to keep hold of my Ethena tokens, and I didn't. I sold them. This project, and I found somebody, Jake Simmons, I found somebody that's on my side. Ethena is the Luna of this cycle. Okay? Now, I'm not going to go through the project in massive depth, but they have created an algorithmic stablecoin, and that stablecoin is paying 36% interest, so 3% a month. You deposit $10,000 with them and you will earn $300 a month. Who wouldn't be enticed by those rates? I know I would be. So Charles Edwards, founder of Capriole Investments, has sparked interest and debate within the community. He heralded Athena as the Luna of this cycle. Now, there is no crucial difference. Its economic fundamentals are deemed sustainable. No, I don't agree. It's 100% collateralized and the yield is variable based on the market forces. Two things Luna wasn't. He also noted that at its zenith, Luna's valuation exceeded ENA's current market cap by more than 20-fold. This is irrelevant. It doesn't matter about the size of the market cap until it goes wrong and takes out 20% of the market cap of crypto. Let's move down a little bit. So it launched on April the 2nd. It's gone from 30 cents a token to $1.45. This is attributed to the Athena Labs Strategic Enhancement and Rewards Program, now in Season 2. A 50% reward boost for users locking their ENA tokens for at least 7 days. Now, the issue is USDE is the fastest growing USD denominated asset in the history of crypto. Now, again, I am very worried about this. ENA is often compared to Terra Luna, but the differences could not be much bigger, as Edwards also noted. ENA is not risk-free. Okay, let's point this out. It is not risk-free. It is as close to risky as you can get. A demise like the one of Luna is highly unlikely. Okay, now highly unlikely does not mean the same as impossible. Investors need to be aware of other risks involved with ENA. Now, I always tell you people, you guys, why is somebody motivated to say what they're saying? In this instance, we are talking about a stable coin. So USDC, USDT, USDE. USDT and USDC will pay you about 5 or 6% interest. If you look at government bonds in America, they pay about 5%. So you can kind of understand where the yield comes from. This pays 36%. And in this instance, it was as high as 50%. I think it was at 46, 48%. And there is a lot of problems with it. Oracle risk, liquidation risk, spread risk, collateral risk, custody risk, exchange solvency risk, Athena entity risk. Money Supply concludes that despite these risks, the framework of over-collateralization on platforms like Morpher, the Maker, Surplus Buffer, and the MKR backstop, supported by a substantial proof of liquidity, serves as a robust mitigating factor. Now, let me explain the problem. If you have a $1 billion or $2 billion stablecoin, it isn't going to wreck the company. It isn't going to wreck the exchange it's on. Now, I'm going to tell you something, and it's called the Kylie Minogue problem. And this is going to sound strange. Kylie Minogue, many of you won't know who she is. She was a very big superstar in the 1990s. And she was with a record label. And she became that big that record label, 99% of people that worked for that record label worked on Kylie Minogue because she was a superstar. She left. And she was so big that she wrecked the company. And that record label was never the same afterwards. At $2 billion, this isn't a threat to crypto. At $50 and $100 billion, this is a massive threat to crypto. What is it collateralized by? It's collateralized by Bitcoin and Ethereum. If there is a market crash in the bear market, when did Luna crash? Luna crashed in the bear market. If this crashes in the bear market and it decollateralizes, so the assets become worth less than 100% of the value of the token, what are they going to have to do? They're going to have to sell all the Bitcoin and sell all of their Ethereum. They're going to have to dump it onto the market. If they dump 20 billion Bitcoins in one day to keep this asset at $1, if they dump their Ethereum on the same day, you're going to see the same problem that Luna had. It will depeg. It might go to 70 cents in the dollar. It might hang around there. But all of that sell pressure is going to happen within 48 to 72 hours. Now, it doesn't matter when it's this small. It's tiny. It matters in the future. It matters in 1 or 2 years' time. I don't trust it. I don't trust it at all. Now, if this project gets to the point where it has 300% collateralization, and for every $1, there are $3 in Bitcoin and Ethereum, and even in US Treasuries, then, and only then, will I have belief that this project has enough in reserves to substantiate it. If I look at Tether or Circle, they have $100 billion worth of stablecoins. They have $150 billion in notes. Tether are going out and buying Bitcoin with their profits. That's the key, with the profits. This is collateralized by crypto. If that crypto crashes, if there is a problem, if there's an existential problem with Ethereum and it drops 60%, this decollateralizes, that news goes out, people withdraw the funds, it will depeg, it will cause the next crash in the next bear market. So when you see 36%, and again, it's not financial advice, it's just my opinion, I don't trust this project as far as I can throw it. I will change my opinion in the future when it's in a better position and it might have billions and billions and billions and billions of assets and reserves, fine. But at this moment in time, it could go to the wall. And the more money coming in, the more chance of it surviving. The more collateralized it gets. If it gets to 150, 160, 180% collateralization, it will become safer. But at this moment in time, I don't want to see this project being a success because it's not backed by real money. It's backed by crypto, and crypto is volatile. And this is supposed to be a stable coin. It isn't a stable coin if it's backed by volatility, in my opinion. And I could be wrong. You could get 36% interest for the next 2 years and have no problems. But again, this is the chart of Athena since it launched, and it didn't launch that long ago. It launched, when was it? A week ago. Now, this is the token. This isn't the actual value of the stablecoin. The value of the stablecoin was $1. As you can see, by staking this for a week and getting your 50% rewards, this coin has moved up from 86 cents to $1.50. So it's almost double in a week. This is to be expected from a new coin anyway. I'm not going to have a go at them about that. It's going to find a fair value price. The more money that comes into the project, the more this is likely to go up. So you are probably, in the short term, going to see a return if you buy the Athena token. That token is different from the stablecoin. So I do think it's going to move up. I think this could go up to $2 or $3 quite easily over the next few weeks, especially if Bitcoin moves, and then it will find a fair price. I don't know what that fair price is going to be, but again, I am not saying don't buy Athena. I'm saying steer clear of USDE for now. I don't trust it enough. It's too new. They don't have enough assets in collateralized assets for my liking. The token itself is fine. I haven't done any fib levels on it. It's a week old. I don't know where the price is going to go, but I can see it moving up. You could do quite well holding this token for the next couple of months, because I don't see it going out of business this year or maybe even next year. As I said, I think this is going to be the black swan of the bear market next year, because as soon as there is any shred of doubt to do with this token, it will collapse. But we're a long way off from that. And also, this token is not tied to the stable coin. The other problem with Luna was that the Luna token was connected to UST, so there was a direct correlation. This is not connected directly to the stable coin, so you'll do well to hold the token, but I strongly advise against looking at investing too much money into a stable coin paying you 36%. And I have reviewed the project, I have made a video about it, and I have said the same thing in that video, and that video I think is a week old now. Now we're going to move on to something which I do like. Don't let me think that I don't like things. I do. But what I'm also going to do, I'm going to pause the stream again, because I do need to go and get some more coffee. I don't know why it's getting thirsty. So let me go and grab a coffee. I'll be back in about 20 seconds. I am back. Okay, before we get on to this then, a question from Fran. Any comment on the congestion on the Solana network? Fees are a bit high. Yes, I do. So basically what has happened is that a couple of new projects have started on Solana. One of them is called ORE, O-R-E, and it is a proof of work coin that operates and is operating on Solana, and it's added about 15% to the total number of transactions on Solana. And what happened, I covered it yesterday, but what's happening is they've passed a resolution to change the way that blocks are added to the change. The mechanism, the voting mechanism is changed. And at the minute, what happens is the validators are waiting to see which blocks are being approved, and then they're approving them, because that's how they get their rewards. They're changing it to a system where you get your rewards for voting. I can't remember the name of it now, MWA or something like that, or TVA or something like that. So at some point in the next week or so, the problem is going to be fixed. But as I said a few days ago, every chain has its own problems. Every chain will have teething problems. I don't hold anything against Ethereum or Solana or Cardano. In this instance, they're a victim of their own success, and they are scaling in real time. So as far as I'm concerned, this is a problem that's going to go away, but it's going to take a few days to go away. And it is a pain in the backside, and there is a lot of FUD about it, but it will get solved, and we will be better for it. So yes, there is a problem. Yes, my transactions are failing, but I try from time to time, so I'm not overly overly bothered by it at the moment. I know people are kicking off left, right and centre, but I'm not. There's not a lot we can do about it. It's just one of those things, unfortunately. And again, we had problems in the last bull run and the bull run before. Ethereum was a disaster. People were paying $1,200 to put a transaction through, when I think it was the Bored Ape Yacht Club were selling land in the metaverse that they're building, and if you held a Bored Ape or a Mutant Ape, you could get land at a discount, and there was thousands of people trying to buy simultaneously. $200, $300 transactions were failing. It's just part of the way the ecosystem is. We want to have these problems now. We don't want to have these problems in 3 years' time, because that will cause damage to retail, and that's what we want to avoid. Now then, Ondo. I like this project. I haven't done a video on it, but I do like it, and I keep seeing it pop up. So Ondo is going to use blockchains as middleware to trade traditional securities. That's one element of it. Now I have got, or I did have the website listed here, but I don't seem to have it anymore. Just give me 1 second. I don't know why I don't have it. Right, so I'll bring the website up in the background and we'll have a quick look at that in a minute. So Ondo is going to use blockchains as middleware to trade traditional securities. The lines between crypto and traditional finance continue to get blurred. Ondo Finance is a DeFi project offering some of the leading tokenized US Treasuries products, and it has introduced a new solution that taps into the liquidity of traditional finance markets. We're not going to go through each and every part of this. We're focused on sort of enabling these public securities to be used in on-chain financial systems, he told The Defiant. Ullman gave the example of collateralizing securities as a potential use case for the new tokenized form. With Ondo Global Market Settlement, the time period during which a trade is finalized will still work the same as traditional securities. It's just there's a 24/7 on-chain abstraction to it. Now, we're not going to go into all of this, but suffice to say, it launched in January 2023. Since then, the project's flagship product, OUSG, which invests in US Treasuries through a BlackRock ETF, has reached $121 million in market cap. Now, I'm not going to go into all of this, but I will show it you. So basically what they have done is they have allowed you to buy traditional securities using crypto. So you can get USDY, which is a US dollar yield, which is paying 5.2%. You can access the treasuries, which is paying 4.96%. And coming soon, 24/7 instant subscriptions and redemptions. Now, Ondo obviously has its own token as well, so we can go and have a look at the price of that in a minute. They work with BlackRock, PIMCO, if you've heard about them. They've got regulated service providers, they've got audited security, and they have leadership from people like Goldman Sachs, Maker, and Bridgewater. So these guys really do know what they are talking about. And they're, we've read what the Defiant have had to say about them. They've got independent research. For me, this is a nice project where you can use your crypto to invest into non-crypto related assets. So let me give you a scenario. It's December 2025 and you've made $200,000 in crypto, and you've sold out and you've DCA'd out, and you're sitting on $200,000 in stable coins, and you don't know what to do with it. You don't want to go back into crypto because you know we're going to go into a bear market, and that bear market could last a year. What I would have suggested was bring your money down to a savings account, building society, whatever you've got in your country where you can get 6 or 12 month deposits. get yourself 4 or 5% there, and then just wait for the bottom of the bear market to buy back in. That would have been the strategy. Now, over the next 12 to 18 months, I expect to see more RWAs, real world assets, and it's good. It's good for everybody because it keeps the money in the ecosystem. So I could come along to these guys and say, right, I've got my $200,000. I trust that the American dollar isn't going to go to zero. I trust that the treasuries aren't going to be defaulted on. So I'm going to put $100,000 into each, and I'm going to keep them for the next 12 months and earn my 5.2%, 4.96%. So at the end of the first 12 months, I'll have $10,000 extra dollars. And that money has come to me from non-crypto related money, non-crypto related securities, non-crypto related assets. Now imagine a future where Ondo has access to more products. Let's say they have this deal with BlackRock, and BlackRock give them the global stock ETF, the American S&P ETF. You can come here and treat this as your crypto investment portal. So you could put your $100,000 into the S&P for a year or into global stocks for a year, and the money never leaves crypto. You can then withdraw it back to your wallet or back to your exchange that you're using and put it back into Bitcoin, or you can take the dividends or whatever it might be. Now, this is an example. I'm not sponsored. I have to make that very clear. I'm not sponsored by Ondo. I'm not being paid to tell you about them. I like how this product works because you're diversifying within crypto. So we talk about diversifying, hold Bitcoin, hold Solana, hold Ethereum, hold Chainlink, hold ICP. We tell you this all the time. These are products that we think are across different industries and will do well. They have real world value. They'll be here in 5 years' time. You've heard it all before. But what we haven't told you about is ways where you can earn from investing in different products that are not crypto related, and that would be something like this. And BlackRock, I am sure, in the very near future are going to launch a retail version of this. And this is the future. This is the future. We've got AI, obviously. We have the crypto projects that we talk about every day, and we have real world assets. And this has kind of surpassed NFTs. NFTs give you fractionalized ownership of an asset, and it's great and it's okay and it's good, but it's a bit meh because you could lose your NFT. It can all go wrong. You need to have a little bit more control, and that would be using BlackRock or Ondo, doing KYC. So obviously they're gonna have to know who you are, but it gives you somewhere to put your gains. And 5.2%. Look at inflation. Inflation is 2%, 2.4%. If you're getting 5.2%, your money is beating inflation. Yes, I know Raoul Pal talks about you needing 12% a year just to keep up. I know all of that. But when it comes down to simple brass tacks and simple inflation, this is more than 2 times what inflation is today. So again, they will offer you better deals than traditional banks. If you go into your bank, what's that bank going to do? It's going to charge you a transaction fee. It's going to charge you a custody fee. It's going to charge you an annual fee. That bank, its lights, its computer equipment, its staff, they all need to be paid for. This is frictionless access to traditional finance, and it will be cheaper. Your local bank might only pay you 3.5% APY, and they'll take 1.5% for their fees. You'll be in your bank thinking, you know what, 3.5% is quite good. But if you're more savvy, you're more switched on, then this is a better play. And in my opinion, and you can never get 100% risk-free because Ondo could go down, there could be a problem with the system, the blockchain could have problems. But investing in the US dollar yield or the US treasuries is as safe as you're going to get in terms of an asset. You know, you can go to the UK, you can go to Europe, you can go to Hong Kong. I know all of these places, but it's America. It's still a reserve currency. It's still the go-to place. So for me, real world assets are a big future market. And we're going to see more on those. We're going to see one on the Solana blockchain, I can guarantee it. We've got one on Ethereum. We're going to see one on Solana. Why Solana? Because that's where retail are going to go. We've talked on this channel before about Ethereum being for institutions and Solana being for retail, in my opinion. Cardano needs to work on itself. Avalanche needs to work on itself. The other layer 2s are still fighting amongst themselves. So you just have to look at it in black and white, who's going to go where. Now, if retail money is going to be on Solana, the next step, in my opinion, for Ondo is to launch this on the Solana blockchain and tap into retail. That's what I would do if I was Ondo. I'm not, but if I was, that's what I would do. So that's all there is from Ondo. There isn't really a lot else to say about it. I think it's a good product. I think they're good yields at the minute. And remember, when we come out of this recession and we come out of this period of high inflation, those fees are going to come down. You're going to be looking at 2 or 3% within the next 3 years. So get it while you can. And it's a far safer bet than going after a 36% APR on Athena. So we've gone through something which is very high risk, which is Athena, something in my opinion which is very low risk, which is Ondo. So you get to see both sides of crypto, if you like. Final thoughts then. There isn't really anything to talk about at the minute. I would say we need Bitcoin to start moving up today. I think we need, by the end of the week, it would be great to see Bitcoin at 72,000 because everything will go with it. Ben Cowan was talking today about Bitcoin dominance. Bitcoin dominance is at 52.6%. And why this is important, this will be my final thought. Why is Bitcoin dominance important? If you have 2.6 trillion in assets in crypto and not a penny more comes into crypto and Bitcoin dominance goes up, what does that mean? It means that money is going from altcoins into Bitcoin. If you have the same money swirling around, the same 2.6 trillion swimming around, and Bitcoin's price is going up, and Bitcoin's dominance is going up, that means that the altcoins are being sold and that money is going into Bitcoin. That's what it means. Now, when we see the ETFs buying Bitcoin, when we see Tether printing $1 billion a time, that's new money coming into crypto. So that doesn't count. But even with that money coming in, Bitcoin's dominance is still going up. It was at 51.5% not that long ago. It's at 52.8%. So it's gained 1.3% of the market share. And that's what's important to keep an eye on, because what's the point of holding altcoins if the Bitcoin dominance is going up, which indicates that Bitcoin is growing faster than every other asset? What's the point of holding anything other than Bitcoin? So it's important to take a look at. Ben thinks this is going to go from 52.8 to 54 to 60% potentially in the next spike, maybe next year. We've covered the Bitcoin dominance before. It does run up towards 60%. My personal opinion is we'll go to 58% and no higher, simply because 4 years ago we had less stable coins in value. We had less projects 4 years ago than we do now. I think it's going to be very hard for Bitcoin to hit 60%. Very hard. It's going to need to move rapidly. If it does, we're all going to win because we should all be holding Bitcoin. But if it doesn't, the alts will keep track. 58% is where I think it will top out. That's my final thought. Stable coins and new crypto will keep it below 60%. And that is it. 12:05. Absolute perfect timing. Bullish is back. Good morning, Bullish. Or should I say good afternoon. Thank you for coming. Thank you for everybody for all of the comments, to Fran, to the lurkers, the people that watch the show that never comment, and we all know who you are, don't we? So thank you everybody for watching. Remember, we stream every day. Make sure to give us a follow or a subscribe or whatever it is that you do. I'll be back tomorrow at 11 o'clock, and I hopefully will be back on Saturday at 11 o'clock as well. Until then, take care. Enjoy the rest of the day. Try not to look at the crypto charts too much. Tata land. See you soon. Take care, everybody. Hope you have a great day.